So, as we have it on market streets at half year, there are always a look back and a look forward analysis and outlook in research reports by some of the professional firms on Broad Street. So, United Capital, an investment bank also listed on the Nigerian Stock Exchange, issued a very short one about 3 pages thereabout yesterday. Of course, that's the executive summary, a bit much longer than that. If you go for the main reports. But let's chat a little bit to what do this firm think about the second half of the year, which is just entering the second week. Wale Lucy is the head of research at United Capital, and he's live to us from our studios at the Nigerian Stock Exchange. Good morning, Wale. Welcome to the show.
Good morning, Boston.
Great to have you. So let's start from the global space. What are the key considerations or that you think we should, the key headwinds that you think we should take note of as we start the second half of the year?
Okay, thank you for having me once again, Boston. For the global economy, I mean, there are 3 key issues that we have been, following up with so far in the year. And we expect them to continue for the next 6 months. And the first of that is, of course, trade war or trade tension, the way you have it. We expect that to continue. The tension between Donald Trump and the US, as well as China and the rest of the world, EU, Mexico, these are serious issues that we expect to continue to shape the way investors, look at the investment landscape for the, other part of the year. The second one is the issues around geopolitics. Who else is Donald Trump going to, issue another sanction on? And then what is happening to Brexit? Will UK be getting a new prime minister? But for us, the most important factor of all of this is what global central banks are going to be doing. The US Fed, as well as the ECB, the Bank of England, the Bank of Japan, we are keeping our eye closely on them. They've been sounding very, very dovish. They want to cut interest rates. So we think that will happen in the second half of the year. If this happens, the ECB, the European Central Bank, has already hinted the possibility of a rate cut, and they are coming back with stimulus package. So that will direct fund flows back to emerging markets, Nigeria inclusive. So we think these are, very, very critical issues in the global space that we think will affect the investment landscape in the second half of the year.
But again, if you speaking specifically to Nigeria, and we try to, because this report, I'm sure, is all mostly about, basically about Nigeria, talking about, you titled a section of it about the elections, Nigeria, there and back again. You think the 2019 elections and what comes thereafter is a major issue for every one of us to consider?
Correct. I mean, absolutely, the outcome of the election and what we are seeing right now is definitely what everybody needs to pay a lot of attention to. There and back again, what we are talking about here is over the last 4 to 5 years, the key policy makers we've had in Nigeria, the president, the central bank governors, are expected to continue for another 4 to 5 years. So they are back again. What should we be expecting? They have both reeled out, their policy outlook for the next 4 to 5 years. Central bank governor on one hand is very ambitious with a double-digit growth target. He wants inflation rate at single digits. He wants to keep FX stable and then create more jobs. And he's going all out to achieve that with the consumer lending, compelling the banks to lend. The president wants to lift 100 million people out of poverty. So we think these are serious issues that investors want to pay attention to. What are the policies they want to put on ground to bring these policies to fore? How are we planning to achieve that? I mean, if you want to lift 100 people out of poverty, or you want to double GDP growth, which sector is that going to come from? Are you going to mechanize agriculture? We are going to concentrate on one cash product. Say cocoa, for example. How do you want to achieve that? What is happening to the PIB? What about the electricity sector? What should investors be looking out for in terms of the policy framework? We've not seen a lot of bold one in the last 4 years. We think they are largely going to continue with, the way they are running the economy over the last 4 years, but with a little bit of more momentum going forward. So those are the things we are seeing, and we are seeing growth, inching up slightly, but struggling to jump out of the 2% level that we've seen it in the last 6 quarters.
Wale, so you folks says in your report that growth will be dependent on quote-unquote policy uncertainties in the second half.
Yes, that's correct. In the next 6 months of the year, there are a number of issues that, we are really scratching our head about. And first of that is the momentum that the CBN is coming out with to drive real sector lending. But on the other hand, the president is yet to announce his minister. There's no fiscal policy, to back up this ambitious plan. The Ministry of Planning and Budget is not saying anything. So it looks like the central bank is the only driving force we have. And on the other side of things, things are still very, very slow. So we are wondering how, we are going to marry, the momentum from the central bank and, the quietness from the, fiscal side, the Ministry of Trade and Investment side, the oil sector, and the critical sectors that should drive real growth in the economy, given this lending drive by the CBN.
Okay, so let's talk about the markets a little bit. You have to talk about the global space, you talk about the broad economy, talk about the market. Your report, the report by United Capital, of course, you are the head of the research, says you're doubtful there will be a Naira devaluation despite all the talks and arguments for a bit of a lowering of Naira value. You think we will be able to sidestep Naira devaluation before the end of 2019?
Well, I mean, if I have to go by what the central bank governor is saying, it looks like that's the line we are likely to toe going forward. Because what is clear is that over the last few years, Nigeria does not take, an adjustment in currency, except we are forced to do so. It looks like we are comfortable at 60 to 70 Naira price of oil with a lot of influx of foreign capital, even though they are tracking money market fund. So we are comfortable with reserve at 45. But the truth is that if we look at our revenue profile, it looks like we need to take an adjustment or, probably, harmonize the rates between the official and the market rate to increase government revenue and reduce, the rate at which we are, aggressively pursuing borrowing. So what we think is, for now, the CBN might not take a devaluation, but, the banks have been calling back their liabilities. Maybe in the medium term, we'll be doing that, but it looks like for now, we are comfortable with the level.
Okay, so give us about 2 minutes of the time remaining, or a minute to talk about the financial assets, Naira assets, whether the stocks, bills, and bonds. We've had a very decent first half of 2019. Yields are down on average about 200 basis points on our Naira bills and bonds. Very happy one there. Good handshake to central bank, the DMO, and others who are trying to rejig this market for us. So that was good. But again, it's still a very decent carry trade for any foreign investors who want to invest in our Naira assets.
Mike is done.
Wale?
Well, I mean, for the markets, what we think is that for equities, for example, primary market activities as well as corporate action has been the driver. So we think that will continue going into the second half of the year. There's a lot happening in the primary space, corporate actions. But we are very doubtful that the markets, will, return back to, a northward movement. Because if you look at what happened in 2017, you need a major trigger to trigger a rally again. So we are very, very muted or modest about return for equities. But for yield, we think, with what the CBN is doing for now, that yield you know, it looks like it will continue to moderate. But the shape of the yield curve will start, you know, taking a normal outlook. With, you know, at the lower end of the curve, things are very, very low because of huge demand. But towards the higher end of the curve, I think it's kind of capped around 13.5% MPR. We think that, you know, will continue. You know, it will move slightly lower, but, you know, it will normalize going forward. For Eurobond, which we are very, very excited about, we think that the size of liquidity that has left that market will also drag the yield on Eurobonds slightly. So we think those interested in dollar assets should actually be buying a lot now, because with the size of demand that will come, you might see a lower yield environment also.
Wale Olusi, thank you so much. By this time next week, we'll be talking about central bank's monetary policy decision day. Let's touch base next week and try to continue this conversation from there, and then listen to the MPC and the central bank governor, what their decisions will be for us at half year. Thank you so much, the head of research at United Capital.